Hey everyone, welcome back to the channel. Today we're breaking down the latest Consumer Price Index report for April and what it means for your wallet, your investments, and the broader economy. There's a lot to unpack, so let's jump right in.
The April Consumer Price Index, a measure of inflation at the retail level, was released moments ago and showed that inflation essentially held steady. Let's start right there. What do these numbers tell us about inflation, where the economy is right now?
You know, the good news is the economy, I think, is in a lot better of a place, honestly, than a lot of economists had expected at this point, especially given all of the conversations we've been having over the last several months about the impacts and almost psychological impacts that tariffs can create around buying things, people pulling things forward, spending more money to do certain things. That has not happened at the levels that I think had been anticipated. It could still happen, meaning some of that could filter out into maybe some data that comes next month or the month after. But this economy has been remarkably resilient and is really a demonstration of just how flexible the economy can be, and maybe even more flexible than some economists had been anticipating.
The Consumer Price Index, or CPI, rose just 0.2% in April. That's seasonally adjusted. Over the last 12 months, that brings inflation to 2.3%, the lowest it's been since February of 2021. That's good news, especially since it came in slightly below the forecasted 2.4%. Lower inflation means your money isn't losing value quite as fast. Now, if we strip out food and energy, which are usually more volatile, we get the core CPI. That also rose 0.2% for the month. Year over year, it's up 2.8%, which was exactly in line with expectations. So what's actually pushing prices up? It's shelter, again. Rent and housing costs rose 0.3% and accounted for more than half of the overall CPI increase. Here's where things get interesting. Some prices dropped hard. Egg prices down 12.7% in April, but don't get too excited. They're still up 49% compared to a year ago. Used cars, negative 0.5%. New cars, flat apparel, negative 0.2%. Food, negative 0.1%. Energy, plus 0.7%, a rebound from March. While April's numbers look tame, tariffs are lurking in the background. President Trump recently imposed 10% tariffs across all U.S. imports and hinted at more to come. But just as quickly, he backed off, with a 90-day delay on tariffs targeting China. That's left economists scratching their heads. Will these tariffs raise prices in the coming months? Possibly, but right now the CPI doesn't reflect much of an impact. Robert Frick from Navy Federal called it good news on inflation, but he also warned that the full impact of tariffs hasn't hit yet. Some importers may be eating the cost. For now. Aichi Amemiya at Nomura agrees. He said, "We expect higher tariffs will likely exert upward pressures on core CPI starting in May, but weaker consumer demand could offset that." Here's the other big story. Interest rates. Lower inflation means less pressure on the Federal Reserve to cut rates. Before the China news, traders expected 3 rate cuts this year. Now, maybe 2. And not until September. The Fed's preferred inflation gauge is actually from the Commerce Department, not the CPI, but CPI still plays a role. So these numbers matter. So here's the bottom line. Inflation is cooling. That's good, but tariffs are the wild card. If they go into full effect, prices could jump again, especially on imported goods. Right now, we're in a wait-and-see moment. The next big number to watch? The Producer Price Index. That's coming Thursday, and it's a leading indicator of inflation down the line. Let me know in the comments, are you feeling the effects of inflation personally? Are you worried about tariffs driving prices up again? And don't forget to hit that like button if you found this breakdown helpful. Thanks for watching, and I'll see you in the next video.